So I'm just going to provide a little bit of update on what the National Partnership is doing, and then we're going to hand it over to our presenters for today. So first, I'd like to let folks know that we're going to be adding some new material to the National Ecosystem Services Partnership Guidebook. We have some papers that the Forest Service has produced about how they're integrating ecosystem services into operations and planning. And soon there'll be some papers from USDA Seafair Project talking about pollination, water quality, and carbon in some of the USDA programs. So those will be posted on the next guidebook shortly. Also wanted to let folks know if they happen to be in the Raleigh-Durham area, we're going to be hosting a training workshop on ecosystem services and a panel on ecosystem services and NEPA at the National Association of Environmental Professionals in late March. The other thing of note is there's a new initiative called the Bridge Collaborative that might be of interest to some people. This is something we've just joined as a member of the Secretariat. It provides a broader view of ecosystem services, thinking about linking health, environment, and economic development sectors to solve global challenges. And there's a website there with more information, and I'm happy to follow up with folks if there's interest. And finally, just to note that there's a Nicholas Institute paper on the use of spatially explicit planning in environmental markets that's going to be released very shortly, end of February, early March. On upcoming webinars, we're going to have a webinar about the new Ecosystem Services Toolkit from Canada by Susan Preston, who's a Senior Policy Analyst at the Government of Canada. We will also be sharing that new toolkit on the next website and hopefully sending an announcement around through our email list. It looks like a really great tool that has some useful worksheets and other pieces to it, so I think people will find it very helpful. Also want to note that the past webinars are recorded and are posted so people can see these talks, and this talk will also be recorded and posted so people can share it. All right, now to introduce our presenters. So Ken Bagstad is a research economist with the U.S. Geological Survey. He works in ecosystem services modeling, mapping, and valuation, and recently spent a year detailed to the World Bank's Wealth Accounting and Valuation of Ecosystem Services program called WAVES, and he was working on natural capital accounting. Jane Carter Ingram is Senior Manager for Climate Change and Sustainability Services at Ernst & Young, where she focuses primarily on natural capital measurement tools and strategies. Before joining Ernst & Young, she was the Director of the Ecosystem Services Program and lead of Science for Nature and People at the Wildlife Conservation Society. And Carl Shapiro is the Director of the U.S. Geological Survey Science and Decision Center, which focuses on interdisciplinary science to address ecosystem services, decision science, resilience, participatory science, and natural resource economics. Carl has served on numerous groups working at the interface of science and decision-making within and beyond the federal government. All right, so thanks to our presenters, and we are going to turn over control to them so they can present their slides and get their talk going. So just give us a moment to transition. All right, and Ken, and we'll get you guys off mute so you can speak. Hold on just a moment.
Thanks, Lydia. So we thought we would start off by just a couple of words from each of us about what our aspirations are for this project and what drew us to it and what we're hoping to achieve before getting into a presentation of the technical details and then moving on to a question and answer. So to get that started, Carter, would you like to start us off?
Sure. Thanks, Ken, and thanks to everyone for being here today, and thanks, Lydia, for the introduction. So as Lydia mentioned, I now work at EY, and I've been helping them develop a new service line around natural capital, which is helping companies and public sector entities identify, measure, value their dependencies, risks, and the benefits that they provide with respect to natural capital, and to identify ways in which those values can be better integrated into decision making. And really, one of the challenges I've found is being someone was trained as an ecologist and geographer in my PhD and postdoc doctoral work and has worked a lot on incentives around ecosystem services at the Wildlife Conservation Society. The challenge I found, and that I'm hoping this group can help us address, is really that bridge between using science and our scientific understanding of natural capital and biodiversity and ecosystem services and making that useful for private sector decisions, and bridging the divides between the information needs and the applications of public sector natural capital accounting, which I've been working on with Ken and Rwanda and some other countries where WCS is working, and private sector accounting for natural capital and measuring and valuing natural capital. So hopefully this group can try to bridge some of those gaps between the public and private sector and ensure that we're making the best use of our natural capital information that we collect through these different initiatives.
Thanks so much, Carter. And Carl, are you there? Carl, are you muted or on the line?
Hey, Ken, it says that he's on, but not sure that he's connected to audio, unless
okay.
he's one of the call-in users, in which case I'm not sure which number he would be.
Of course. Yep.
I'm going to try to send him a chat message here really quick. But
perfect. Thank you.
Well,
maybe we can get started on things if we don't figure that out right away.
Sure.
So
I'm going to try to help him get connected to audio in the meantime.
Wonderful. Thank you. So we'll be sure to give Carl maybe the final word since Carter got us started. And just to get us going on this, again, this is an effort that we officially started with a working group sponsored by the USGS Powell Center and SSYNC, the National Socio-Environmental Synthesis Center, that started last October. And thanks again to the National Ecosystem Service Partnership for the chance to present this. Just to start off, there's a whole host of folks involved in this. As you'd expect with any working group, we've got a number of different people from academia, from the private sector, from the international natural capital accounting community, and so really a sort of cast of thousands project, and want to start off by acknowledging all these other folks whose intellectual contributions are helping to move us forward. So just to start us off, natural capital accounting, this is actually a somewhat vague term, so for many people here who are familiar with ecosystem service assessment, what we have on the left, this Venn diagram is our effort to try to explain what exactly accounting is. And so the ecosystem service assessment world, many of you are actively working on measuring, mapping, modeling, and valuing ecosystem services, using that information in decision making, and trying to advance different environmental and sustainability goals through doing that. An area that there's a great deal of potential, but perhaps not the most solid connections yet, is to the system of national accounts, which is our standard economic measures of the economy. And the most familiar of these is going to be gross domestic product, which is just the sum total of economic activity in the economy, the market exchange of goods and services. So how much, the dollar value of how much is getting bought and sold in the economy. For a long time, it's been recognized that, of course, nature does provide value, and that's not measured in the national account. So there's been an interest in bridging these two worlds, which is this bubble of natural capital accounting, and there's a couple different flavors of it. The first is what's called wealth accounting, which is attempting to measure for a nation or a region the stocks of natural, human, and built capital, and looking at whether those are stable, declining, or increasing as a way to send a message about sustainability. There's also private sector accounting efforts, and firms like Ernst & Young and a number of others have been leading the charge in that regard. And then within public sector accounting, we have measures like the system of environmental and economic accounts that are really intended to be a strong bridge between the traditional economic accounts and ecosystem service assessment. So again, to explain a little bit more about what those are, we start with the system of national accounts, which are developed by the UN Statistics Division. It's a small office within the United Nations, and their goal is to put forth a standard for measuring national economies so that we can compare the economies of all countries that are measuring it, and when thinking about economic trade and governance policies, this is really important information. Again, there's been a realization for a long time that this leaves important things like natural capital out. So in 2012, there was the release of a framework called the System of Environmental Economic Accounts Central Framework. And what this does is it lets us look at the market value of a lot of parts of the economy that have a really heavy tie to nature. Things like agriculture and forestry and mining and fisheries that have a really obvious and strong natural component, and figuring out how to express those in common economic terms that will speak to the national accounts. In addition, there was a realization that there are a number of things that lie outside what's called the production boundary of the national account. So things in particular like regulating services and some cultural ecosystem services aren't included at all, yet we know they're really important. So a framework called the Experimental Ecosystem Accounts is put out, and this is still in its experimental stage. The UN Statistics Division is hoping to finalize a version of this by the year 2020, but there's been quite a bit of testing and input by various expert groups and countries who are trying to do this to try to get us toward a national standard. And anyone who's worked in the field of ecosystem services appreciates, I'm sure, how that field has expanded so much in recent years that it takes some time for us to converge on standards. So what the ecosystem accounts do that let us tie them more directly to our measures of national economic activity, we start off in this upper left area. We can measure important thematic areas like land, water, carbon, and biodiversity. And then we can measure the ecosystems themselves and the extent of the ecosystems and how those are changing over time under land use changes or pressures. We can also look at indicators of their condition, things like fragmentation or productivity or NDVI might be indicators of condition. And at least in theory, we ought to be able to predict how much of the services are being supplied in a physical sense based on those physical measures of extent and condition. So we use modeling in many cases to do that. We also want to look at the use of ecosystem services. This is this green bubble here. And when we combine the supply and use, we can get an accurate physical picture for how services are being provided by nature and used by people. We then want to monetize these using various valuation techniques, and we can calculate asset values by discounting the stream of ecosystem services. We can plug these into output tables for different economic sectors. So these are this lower right and lower half is really the tools of the trade of national accountants, and we're trying to bring this ecosystem and ecosystem service information to bear in that world. So this figure probably looks quite familiar for anyone who's worked in the ecosystem services world, but the reason to mention it again here is that the system of national accounts already includes a number of benefits, from water supply to timber to fisheries. But what it doesn't do is properly attribute those values, part of those values, back to nature. Well, basically, we're saying, without any information about nature, we're saying that all of the benefits are the result of produced capital and labor. And we know that's not true, so we know we're underestimating nature's contribution, underestimating whether that's steady, declining, or increasing. So there's important messages here about sustainability that are getting totally missed by leaving these out of GDP, which is a message a lot of folks have known for a long time. But again, we're starting to get our get a handle on the methods in order to do this. So what the central framework does is really split out this yellow part of the arrow and let us look at how much of the benefits coming from nature, how much is coming from produced capital and labor, and as I mentioned, the experimental ecosystem accounts really get to the things that aren't included already in the national economic accounts. Natural capital accounting itself might be used for different things. Again, I mentioned wealth accounting before, so wealth accounts can provide a good picture of whether a country's development is sustainable, whether they're running down capital in order to fuel consumption. And the natural capital accounts themselves, the ecosystem accounts and the central framework can also give us a picture of that by looking at whether our assets and our stocks are declining or increasing in value. And then we can, of course, use the tools and information for management because they incorporate a lot of the sort of mapping and modeling and valuation exercises that many people in our field have been working on for some time now. There's a nice chapter just to plug the National Ecosystem Service Partnership Guidebook that actually talks about scenario analysis versus green accounting. So this is a place that if you have more questions, I'd suggest you go and give a quick read to. It's really nicely summarized, but some of the ways this differs and why we put them in different bubbles in the Venn diagram are that we have a real accounting framework on natural capital accounting. So when I say that, we just have opening and closing stocks, and the two need to balance. Those can track stocks and flows of ecosystem services. Because of the need for that accounting framework, we have an explicit retrospective focus on tracking change over time. So we try to look at how services are changing, for instance, from 1995 to 2000 to 2005, et cetera, maybe tracked in 5-year increments, but to look at change. That doesn't mean we can't combine it with scenario analysis, as I'll show in a moment, but the real focus is on looking backward and providing the picture that's complementary to national economic accounts information. As mentioned, we include biophysical and monetary terms, in some ways no different from a lot of standard ecosystem service assessments. And finally, and importantly, there are some differences for the economists in that we don't measure consumer surplus because the national accounts are just looking at the exchange value, the amount of money that changes hands. They're not measuring that added consumer surplus. So when it comes to valuation, we use some different methods like resource rent pretty frequently, and stated preference measures like willingness to pay and others are not really useful to natural capital accounting. So some important differences there. I mentioned the ability to combine information from the past with information from scenarios of potential futures. And this is really interesting. This is showing an example of some work that's been going on through the WAVES program in Colombia in the Orinoquia region, which is in green here. And this is an area where there's a lot of different futures related to agricultural management, carbon management, et cetera. And what ecosystem accounts let us do, in this case, we've got 3 backward-looking time points, and when we combine that with scenarios, we can get a handle on what the baseline is for what our ecosystem service trends are and how things are changing over time. So that can let us know for a particular intervention how much additionality we have. So that might look really different if we had a stable condition, a declining condition, or an improving condition. And combining that backward-looking information with scenarios can be really powerful in this case. So how do we actually link the ecosystem services to the economic accounts? We do that through what are called supply and use tables. So this is looking at the supply of economic goods. And here we put numbers into the white boxes and no number, and the crosshatch boxes aren't filled in. So what we look at in box B is how much of different ecosystem services are being supplied by different ecosystem types. And what we look at in box C is how much of certain products are being supplied by economic sectors. We combine that with a use table, and that use table can show again, how much of products are being used by different economic sectors in Box G, and how much of different ecosystem services are being used by different economic sectors in Box E. If we looked at flows between ecosystems, we could also fill in Box F, but that's not explicitly needed. So these types of tables track the flow of ecosystem services into the economy. Just like within GDP, you might track the progress of logs being turned into timber and into furniture and the different stages of the supply and use to different economic sectors. One of the reasons that we were able to get some momentum to get a working group on this in the U.S. is just because it's being used in so many places, and the countries in green were the first 8 countries involved in waves. The ones in blue are countries that are at some stage of exploring natural capital accounting, whether it's the central framework, the ecosystem accounts, or both. So there's quite a bit of movement on this throughout most of the world's major economic players. And some really good international examples. I'll highlight 2. One is for the Netherlands, and one is for Peru, and there's an English version of this Peruvian one coming out soon. The WAVES partnership has a knowledge center here that has a whole bunch of information, foundation papers about accounting, examples, methodological papers, so it's a great place to get an idea of what else is going on in the world. But these are 2 prominent examples. The challenge to actually implementing natural capital accounts, this is the approach that's been used in WAVES, and the key point here is that there's a whole lot of agencies that have a stake in this, and if the information is going to be publicly produced and used to inform economic and natural resource policy, you could imagine there's a whole lot of agencies and individuals who would need to be involved. So when WAVES has gone into countries, they've worked with the different government agencies through the World Bank and those connections to build up an institutional structure to share data across ministries of agriculture and planning and statistics agencies and such, to identify some of the priority issues and which accounts would be most useful, and to work on developing capacity, and from there to develop a work plan toward implementation. When we think about natural capital accounting in the U.S., we have a decentralized statistics system, so that means we have about a dozen different agencies and bureaus that are generating different statistics, everything from the Census Bureau and the Bureau of Economic Analysis over in Commerce, to some of the agencies in the Department of Agriculture, to the Energy Information Administration over in the Department of Energy, as well as key data being generated by USGS, EPA, and a number of others. So there's a whole lot of that needs to go into this. And for our initial working group, we've involved a lot of these agencies. To give one example of how this is playing out internationally before we move into the U.S., I've been involved in, along with Carter, in building ecosystem accounts for Rwanda. And so in this case, we've had really good time series data for land cover dating back to the 1990s. And what we're doing is we're mapping out ecosystem services over a long time span. We've got several ecosystem service tools and methods, and we're testing the effects of different data sources and different spatial resolutions on the results to help develop some guidelines for future users. In Rwanda, all of these accounts are going to be underlain by the huge change that's happened, and the first thing that we do in many cases is going to be compiling a land account. I'll get back to this in the U.S. in a moment, but what we do is we look at how is land cover changing, how is land cover interfacing with land use and with land value, and how are all those changing. And that gives us a baseline to interpret any of our ecosystem service trends. So in Rwanda, we can see some key trends, in particular the change in forest cover from 1990 to 2000, a lot of which was converted into annual cropland. This was during a time of quite a bit of unrest and civil war in Rwanda, so really a focus on survival for many folks in the country. And in the decade that followed that, there was a rebound in the capacity of the government and in planning, agricultural management, et cetera, so the recovery and replanning of some sensitive areas. And we'll interpret a lot of our ecosystem service trends through those lenses. So of course, I mentioned that we're tracking change over time. This is an example of how, for instance, carbon and sediment export are changing over 2 decades and what the changes look like. We can see where the change is centered. Fairly uniform loss in carbon sequestration and storage, except we see a rebound from 2000 to 2010. So that's been a bright spot, partly canceling out some of the declines that took place from 1990 to 2000. And we'll see more when we get the 2015 data later this year. Similarly, we see a decline in conditions, an increase in erosion, but then an improvement in many places, and we can see where that's concentrated geographically. So we can start with these tables. We can produce various graphics, for instance, of how this is changing in 5 provinces across the country over time, how it's changing within 30 districts within those 5 provinces. So this will let us get a handle on where the rates of change are fastest and what some of the policy drivers might be. And look at protected areas in this case too. So how are things changing in different protected areas and what are the causes of those? Finally, we can of course produce maps, and these can be helpful for looking at trends. This is looking at the annual water yield as well as changes in how quick runoff is flowing on the landscape and at the recharge of groundwater. And you can see for some areas like the circled area for quick flow, a real increase in how fast water is running off. And if that trend continues, you could imagine it being a potential problem for water supply in conditions of population growth and land cover change and climate change. So something to look out for in those parts of the country where that's changing. Finally, policy applications. The sort of classical water fund analysis is one piece we've been doing in Rwanda, looking at places where there are dams for hydroelectric or irrigation and water treatment plants, and looking at places where the conditions in terms of water quality, quantity, and timing are declining. So a number of different applications we can look at for Rwanda, and when we tie these to land use and the specific economic sectors, we'll have an idea of what the various contributions and uses of ecosystem services are by the different industries in the country. I'm going to spend a little bit of time to close us out talking about this working group, which again just started in October of last year. So really more vision than results at this point. But our goal when we came together last fall was to demonstrate that natural capital accounting is feasible and to provide a roadmap for how to achieve that. So what we want to do is produce a strategy, produce a proof of concept, and to raise awareness of natural capital accounting. So this is a great venue to get started on all of that. Our research tasks, we're aiming to synthesize existing information. So there's already a lot of great data here in the U.S. We're fortunate to have quite a bit of it and to have it be publicly available, also to have a great research community, both within government and academia. We want to attempt both subnational natural capital accounting, so building some ecosystem service maps and doing some valuation work for a state or a large watershed, and then we want to scale that up and take a first effort at doing some national scale mapping and ecosystem service valuation in the context of the account. So we're engaging with the different agencies and also the private sector to talk about potential applications and make sure that the work we're doing is going to be useful and demanded, and to do outreach. So we're also fortunate to have paired with a number of experts, not only from the World Bank, but also from Canada and Australia, which are countries that have about a 10 to 15 year head start on us with natural capital accounting. And some of the advice we got from them is, of course, to understand and communicate our value proposition, to start small and develop and iterate, to pick relevant accounts, to work on our communication across agencies, and to make sure that we're taking these dense tables and distilling out useful indicators that will help us communicate well. So all these, perhaps none of them are really surprising, but they are sort of best practice for how we make a product that's useful and adds value to what's already being done. So in order to do that, we've been working on our communication. We'll have a piece out later this year about the effort and describing what it is and how we hope to move forward with it. We are starting out with land and water accounts, and then we'll solicit feedback, hopefully this fall, from the research community and the user community, and iterate a second version of those accounts over the lifespan of this. We are working to pick a policy-relevant subnational case study. That'll probably happen this spring. Again, communicating across the whole range of government agencies and developing indicators. So what we're hoping to do in this first year, as I mentioned, to have an initial journal article and a first iteration of national land and water accounts, and to solicit critical feedback. And then starting near the end of this year to do a second iteration of those, and also to pilot test some subnational and some national scale ecosystem accounts in terms of the mapping modeling that would go into that. So just an example of what this looks like. Again, for anyone familiar with the National Land Cover data set, you've no doubt looked at these types of maps, but what would this look like to summarize for a watershed? In this case, this is the Upper Rio Grande in southern Colorado and northern New Mexico. And if we looked at this through the lens of a land account, we can look at places where there's major change, like forest fire, in this area where there's a pretty clear fire scar. We could look at urbanization, in this case in Santa Fe, although you could of course do this in any city. We would have accounting tables that are detailing how much of different land cover types are there additions and reductions to, and what's the change over time. And again, graphical indicators. So we could look at this change from 2001 to 2006, and from 2006 to 2010, and see that there's some important differences here. From 01 to 06, decline in open water and cropland. I'm not sure if this is a drought period in the area, but those are the types of changes we might evaluate. Some changes in forest land during the second period, and really some pretty steady changes in urbanization, which at least I was initially surprised by, given that this 2006 to 2011 period spanned the recession. But different types of stories that we can look into and interpret through the lens of what's going on the ground, and communicating why these synthetic indicators add value. Again, this is just a simple, very simple example for land cover, but when we incorporate land use, land value, and ecosystem services, it'll tell a much more complete story. Moving on to that land use, we're working with the Bureau of Economic Analysis and with some other colleagues who are doing a better than ever job of mapping out land use in the U.S., and in particular trying to tie these to the NAICS codes, which are the codes by which the reporting of our economic accounts are broken down. So you can see different economic sectors hierarchically arranged from the broadest categories on the left to more specific categories on the right. These go down even another level or two to very, very specific, but there's a limit on how much we can map. And there are interesting mapping applications. Here's an example from the Census Bureau that's mapping out jobs. And so whereas, for instance, the National Land Cover data set just maps out high density development, here we might look at separating out manufacturing from office space, from high-rise apartments, for instance. This is an example that's showing, in this case, we've highlighted manufacturing for the year 2012, and this is in the suburbs of Cleveland, Ohio, and the hotspots here are showing up as more manufacturing jobs. We can similarly look at a whole range of economic sectors, look at that change over time. So it's a pretty slick app, and one that we can combine with land cover information to get more information about the ties to the economic sectors. Dave Theobald's put together a really nice national map of land use, which we're hoping to augment with that census data and with some other data. BEA also has a partnership with Zillow that we hope will let us tie to the economic value and really build out land accounts. We may be able to do more with NOAA and coastal zones as well, and hopefully to update to 2016 as soon as those data are out. This is another land use data set that's showing, developed by USGS, that's showing time trends and land use in Northern Virginia. The second step will be the water accounts, which we'll be starting work on this summer, and this is tracking flows of water through the economy. The USGS water use data are a core piece of these accounts, but we also add in a number of water quality data sets and data from BEA about infrastructure assets, and perhaps data from models like these water yield maps. The ecosystem accounts themselves, we might be able to add in a whole variety of these, and really we're looking to piggyback and build on existing efforts rather than to do novel efforts. There's a lot of great work that's already been done, and there's no need to reinvent the wheel. So we're hoping to connect with people, but also to perhaps to run some higher resolution national scale data with the computing resources that we have in place today. So what we hope this will be able to do is really to answer demand for national scale assessment. And we know that there's been a lot of demand, and there's been a lot of great work done at the regional and watershed and landscape scale, but that scaling up the accounts has been a challenge. We feel like there may be a place here where we can provide a sort of first cut data to managers of either public lands, of private sector natural resource based companies, and provide them with a first cut of data, and they can always go do more specialized and specific modeling and scenario analysis and valuation themselves, but that this could be the type of information that would fill that gap. And there have been a number of calls out for this. Of course, there was the OMB memo that came out of the last administration, and while we're not sure where this will go in the future, these have been continuous calls that have happened for the last 15 or 20 years to better measure this. So it's something that probably isn't going to go away. So we, to close out, I'll just mention that we are a working group of 15 people as a starting point. We're by no means covering the entire landscape of ecosystem services, and there's a lot of great work being done out there. And we'd really like to piggyback on others' work, as I mentioned, and not reinvent the wheel. So we'd like folks that are interested to learn more about natural capital accounting to contact us to understand where your data could be useful, and to collaborate and see how we might collectively build something that's bigger than the sum of its parts and really provides our country with a step forward in terms of ecosystem services. So that's my last slide. Carl, if you're online, maybe if you have any closing words, I'd love to give you a minute to speak. Since
are you able to hear me, Ken?
Yeah, we can hear you great. Thank you.
Okay. Well, I was probably a third of the way into my remarks earlier, and then I had the sudden realization that I was talking just to myself, and nobody was hearing me. So I'm glad this time I'm able to communicate. First of all, thank you, Ken, for really a very clear and good outline of this issue of natural capital accounting and the project that we're beginning to undertake. And I wanted to thank the NASP for hosting this seminar. I think, sort of building on what you said, but sort of adding a little more context. During the past 2 decades, there have been tremendous advances in our understanding of ecosystem services, on how to identify ecosystem services, to quantify them, and very importantly, to value them. And in the past several years, this work has really reached a crescendo, and this creates an opportunity that we believe is really important for us to build natural capital accounts that link into the economic accounts that we have as a nation. And everyone is familiar with the impact of the economic accounts that are out there. Gross domestic product is routinely used in decision making, even though it has a lot of noted imperfections and problems with it. But our society, our decision makers make all sorts of decisions on economic policy, on other national policy, based on the direction of the GDP, based on the perceived economic health that we have, economic growth, and our understanding of which sectors are prospering and which ones are not. And a major problem, as most of the people on this call are aware of, that we have with natural capital accounts is that many of the services and goods and capital that comes from nature are not traded on markets, and as a result, we don't have dollar values for those accounts. And that's where all of this research that's been going on for the past couple of decades on ecosystem services comes into play. We have a lot of advances now that make the development of natural capital accounts possible. There have been case studies, as Ken was mentioning, that have been done at the World Bank and elsewhere that have demonstrated the possibility of this. And very simply, we have an opportunity in the United States to develop a set of natural capital accounts that can link in to our economic accounts and improve our ability to understand economic health and economic growth. That includes not only goods and services produced in markets, but goods and services produced from nature.